What's up, EGA Tribe? Welcome back to another session with the Everyday Growth Advisors, doing another breakdown where we plan the trade and trade the plan. Don't forget to peel the onion. Very quickly, right before we continue here, make sure you like and subscribe to our videos. It really truly helps us grow the channel a lot, and these daily breakdowns are going to be more often than you guys expect. And hello, you guys finally get to see me here on the bottom right of the screen. So new little setup, new little shebang. Let's get started, guys, right into it. So yesterday we had market trading fairly nicely throughout the first half of the day. We actually had a pretty nice green push up on tech. We saw lots of travel stocks being rotated into. We saw a little bit of action in the big tech and semiconductors as well. Most of the day, energy was slipping as well as financials. We were, kind of the idea that sector rotation was about to happen. And then at the end of the day, we got a rug pull. That's right, we got a rug pull at the end of the day. And that was a nominal rug pull. So let's go ahead and give you a couple of updates here. So the first thing is we are still at a key level for the S&P 500. Looking on the daily chart here, looking at SPY, we're still fighting. The bulls and bears are still fighting for control of this middle space right here. As the key level remains 410, which has been the level of support, strong support here for the S&P 500. That closing candle, though, wasn't a very good candle, formed a evening star. As you can see, that is usually a bearish reversal pattern on the 4-hour, right? And that isn't really a good sign. We might consider, exposing ourselves to downside position at this point. However, we don't know what's going to happen today, right? We have to keep that in mind. As yesterday's recording, I was mentioning that, this is a key battleground area. We don't know where exactly things are going to go. We may be fighting it out, bulls and bears, around this spot. Why? Because the market is a little impatient and a little speculative about where the future of inflation and where the future of the job market is. That is how we determine the economic success right now, right? Reopening is going to be based on those things. We have a lot of pent-up demand. We have a lot of great possibilities that will be coming into the future, but we need this job market to be back on track with a growing traction with job numbers. So till then, we'll continue to see some choppiness. On the 1-hour chart, you can see a clear level of support here at the 410.64. This will be the level for us to hold today. If we do break below this level today, we will be exposing ourselves to the downside, the 400 levels once again, and might even possibly go down to close this gap, if you see, at 400 to 402, somewhere around there, right? So there's a little gap here at the 400 to 403, which needs closing, and we might go down to close that gap. We might get another leg down. There's a possibility. Also, the other thing that is possible is we trade sideways. They continue to trade sideways, which I mentioned might happen this whole week. Why? Because it is OPEX week, right? We have multiple option contracts across multiple financial instruments that are expiring this week, okay? So this is something that you have to keep in mind this week, okay? Moving on to the QQQ, just getting into the rhythm of doing things here. We had a really nice push-up yesterday, double top formation, and then we came back down, and I think today we're going to try and come back down to this possible bounce area back again at 316, which is the key level of support, remains the key level of support interim for this tech sector, right? Or rather the NASDAQ ETF. If we do break below this level, we'll go down to close the gap all the way at the 300s. But let's not talk about that until we get there. We still need to break the 316. This seems like a pretty strong support level. Even the 319, 320 seems like a very good support level here for the NASDAQ for us to reverse still out of. Okay, so there are a couple of things here that you got to keep track of. Now, on the Dow Jones, the situation is very similar. We are still fighting for control of this two key zones here. If we look on the 1-hour chart, you can see a clear fight between the bulls and bears between these two zones, the 336, 338 on DIA, and also the 341, 343 seems to be a key supply zone. So this one is actually a supply zone right here versus the bottom here, which is supposed to be a demand zone. So we'll be seeing key fights between these two and a possible, pivot between these 2 points in this coming week. Moving on to Boeing here, which had a breakout yesterday, technical breakout, and then sold back into the falling wedge. Yes, Boeing with the classic buy up and sell off. This has been happening a lot. It's been happening way too often with Boeing. It formed a nice cup and handle, wasn't able to hold this pattern, throughout the day, ended up selling off towards the end of the day, which is, probably signaling that it's going to go further down into the 222s back again to consolidate further until we can get a nice squeeze out of this and then go for the breakout, which we've been seeing on the weekly chart has been pretty consistent. You can see right here on the weekly chart, Boeing has consistently made these buy-ups, sell-offs into these wedges, and then a violent breakout again. So we're expecting this to happen again, possibly up to the $300 level this time, and we are fully positioned for this. So quick little update there with Boeing. We'll see possibly further consolidation here in the 1 hour before we see another breakout again. Baba here tried to push up yesterday. Chinese tech was looking a little strong along with the Qs, but then ended up fading away towards the end of the day. It did hold this key level 213, which was a support level, and we'll see how this opens up and does today. We are really looking for Baba to kind of retrace back up to the 200 EMA, somewhere around the 222s to the 223s. This is a key level of supply up here, and we hope that in the near future this one will be coming up. I'm already positioned for this trade as well. Another one to alert you guys on technical breakdown here. FedEx alerted this to the group yesterday on the Discord channel, which by the way, don't know if you're a part of yet, but if you are and you are considering joining us, please visit the link in the description. That's how you can get access to us and all of our trades and all of our trade ideas live during market hours. We trade live every single day with our team. Okay, so FedEx breaking down out of a pennant here. Looks like bearish for the time being. Might make a move down to the $300 levels. Looking at a $6 move down might be possible here to find support before moving back up again. And that's all we have for today. I want to keep these as short as possible, succinct, and close to the vest so that we can do these breakdowns more efficiently. I hope you enjoyed the video. If you did, make sure you like and subscribe to this video. And drop us a comment. Tell us what you like. Tell us what you want to see. Maybe you have a ticker that you want me to break down. Comment below. Let me know. I'll do it for you. All right? Peace out, and I'll see y'all tomorrow. Bye!